What's up, everybody? Oh, I feel like I probably need to look into playing some theme music or some sort of intro song while we wait for 5 o'clock to roll around as people kind of come in and get situated. What's up, Ricksan? Interesting to see what kind of views we get when we're competing with postseason football. Yeah, that'd be awesome if you can do that, Rick, and anybody else listening. Go ahead and try to share this stream if you're on Twitter, Instagram, wherever you could throw it. Obviously, anybody helping spread the words, much appreciated. What's up, Sam? Dumps and Pumps. I like that name. Hope everybody has been enjoying their weekend. You have one extra day as the markets are closed tomorrow, so let's not all forget about that. Oh, thank you, Sam. Hopefully I don't let you guys down. Should be a really good topic today. Something I'm a firm believer in, and always try to include some sort of gold nuggets at the beginning of these things so that you get more than just some ideas out of it. And the topic we're going to touch on today is something I'm pretty excited to talk about. I went to a really awesome monster truck show last night with my family, and my son, who is 3, his face lit up. It was pretty awesome. What's up, MJ? Sunil? Hey guys. Yeah, I am ready for the Chiefs game. In fact, considering we are competing with postseason football with, the time of day we're putting this together, I almost considered doing a Monday prep, but we'll do it on Sunday. We'll get it done. You guys can enjoy your day off tomorrow. What's up, Super Sam? Just about ready to kick this off, guys. All right, well, welcome to another episode of the Sunday Prep. This is January 16th. Ricky Analog from True Trader right here. And make sure you guys understand the market is closed tomorrow, so you have one extra day of free time. Spend it how you will. I encourage you guys to do it, spend it doing things other than market-related stuff. I'm a firm believer, guys, that you gotta work so that you can have the life you want. You don't want to live for work. And, that's what I've been doing all weekend. Of course, I throw these preps together and try to get prepared for execution on market open come Tuesday. But I definitely enjoy my time away from the screens as well. Real quick before we get into the topic of the day, as always, guys, make sure that you subscribe and turn on the notifications so that you are seeing things like when Goose goes live for his midweek watch Thursday mornings, 8:30 a.m. market time, and usually goes about a half hour. Gives himself that extra 30 minutes before the market opens to kind of get everything situated. But that 8:30 to 9 a.m. slot, he is absolutely dropping some golden eggs from the goose, right? Last week he touched on the idea of maybe some people should try to take a step back and zoom out on time frames and not necessarily be so focused on these 1 minute charts. And I couldn't agree more. Everybody gets enthralled in this marketing of the stock market where everything is sold to you as Lamborghinis and scantily clad women and stacks of cash with rubber bands and parties on yachts, and it can all be yours working 30 minutes a day trading this strategy on a 1 minute chart. And I am a firm believer in working a 30 minute to an hour a day trading something that you have an edge in, but you got to really stop and ask yourself what fits your personality. And not everybody's cut out for day trading, and that's okay. There is a whole other world of traders out there that swing or position trade or just invest, and there's nothing wrong with that. And Goose has been around long enough to know all angles of the market, so make sure you guys definitely check those out. He's really dropping some good knowledge. Cobra is the broker I prefer, guys. If you use the description the link in the description, you'll get 25% off your commissions, which that really adds up, by the way. And you get a free month of whatever platform you want to use to execute your trades. I prefer DOS. Cobra is by far my favorite broker, and I've had a lot of brokers, and I still have a lot of brokers. But as far as the ones I personally enjoy using and use on a regular basis, Cobra's hands down the best for me. Guys, if you don't know about scripts to trade, check those dudes out. They have some really big things on the horizon for 2022, and the tools that they create are by traders, for traders, and priced right up your lane. You guys can't get the kind of tools that they create for the kind of prices they're charging. And the last thing I want to always make sure you guys know about is Spike Heat. These guys create historical data tracking software that allows you to create an idea in your head that you might want to test, and then go pull the data to either confirm or refute that thesis, whether or not there's actually an edge in it. So again, you'll never ever hear me talk about a product that I don't fully believe in myself. So if you hear me talk about these guys in the Sunday Prep or anywhere else, it's because I use them and I believe in them and I know the value that they offer. So what did I want to talk about today? I want you guys to stop being followers. No more herd mentality. No more looking on Twitter to find somebody else that believes exactly what you believe. You will always find somebody on Twitter that believes in your angle of an idea, regardless of what the angle is. And that's from both sides. You could be short bias on Tesla, and there's the whole Tesla Q Twitter FinTwit. Then there's also the whole cult of Tesla believers that are, bullish on Tesla no matter what. You're always going to find people that will agree with you. And in fact, if you're on Twitter looking for confirmation of your idea, that's probably a good indicator that something's not going right for you in the trade. And that's why you're looking for some sort of conviction outside of your own. You guys want to have careers? Learn how to be independent thinkers. It helps on so many different levels. So it obviously helps on creating your own ideas in terms of what I might trade this week or what I might trade today. Anybody, and I know this sounds really funny coming from a guy who's putting out a Sunday Prep where I'm about to tell you some ideas, right? But I even put the list out ahead of time so you guys can look at the ideas or the names that I'm going to talk about and see if you can create your own ideas from that list. That's because I want you guys to not really need to tune into this. Not because I don't enjoy doing it. I love trying to show people what goes through my mind, the way that I see a thing or whatever. But for instance, one of the names I'm going to talk about today is, I'm just going to pick a random one, Starbucks, right? Regardless of what I say about Starbucks, if you had done the homework when I put the list out on Twitter or in TrueTrader, whatever idea you come up with is just as valid as mine. even if we don't have the same idea, even if mine's long and yours short or vice versa, I am not going to ever tell you your idea is wrong and my idea is right, because that's bullshit. 100%, if you come up with a trade plan and it's the full plan, the idea of where you would enter, where you would be wrong, where you're thinking this can go, the full plan, then there is no way anyone can ever tell you that idea is wrong. But there's something so powerful about doing that. The conviction you get in the idea, the ability for you to actually manage your risk once you're in the idea, because it's your idea, you will know when you're wrong, versus copying somebody and not understanding the full plan, right? And we talked about that last week, but this week's really just about learning how to see things through your own lens, becoming your own critical thinker. Now, that what I was just talking about kind of like lends itself to show you why it's so important for being able to come up with trade ideas. But think about it from another angle too. When you start thinking for yourself, it even allows you the ability to have theses, like trade ideas or setup ideas that you see happening in the market that you then want to go and back test and see if there's an edge. You will never be able to do that if you're just following people, right? You're literally taking someone else's word at face value if they tell you, look, here's a pattern I noticed, and you can enter here, and your target's here, and here's where I'll stop. You're just taking their word at face value if you just follow that. But if you see a pattern or just something that you keep seeing over and over again in the market, and you have that creative idea and say, light bulb, let me go test that idea. That's where the real power comes in, because developing your own edge, finding something maybe nobody else has noticed, and then going and back testing it gives you the ability to dig so deep into something that you create your own setup. And from there, the possibilities are endless. So what I would like to kind of just tie it all up with is, if you follow trades, you can make money, but it will most likely never turn into a career. If you learn to think for yourself, this can actually become a career. And, you know, I say it a lot with, I say like, okay, you can make money today by breaking your rules, right? I say, and I'm just saying there's a correlation here. You can make money today by breaking your rules, and you could be green on this trade that you're fighting, right? You had a plan to stop out, but instead you add and you dig yourself out of this trade. You can make money today, or you can have discipline and you can have a career. It's the exact same thing, right? There are certain things that you can have one or the other, but you can't have both. You can follow traders and take their ideas all day long, but I don't want to say you're guaranteed not to have a career, but it's pretty close, right? In order to have this be something where you have longevity, you have to learn to see things through your own lens. And the coolest part about that is that there's no such thing as an idea that is wrong. The only thing that can happen is it doesn't work and you stop out and your risk was managed. But that doesn't mean anything, because even the best ideas are wrong a lot. Okay? Like, honest to God, one of the main setups I trade, 40% win rate. And I'm completely happy with it. I love it. One, I love not having a high win rate because it makes it so easy for me to think every trade I put on is going to be wrong. And two, I know every statistic behind that setup that gives me the conviction to take it every time I see it present itself. You won't ever get that from following somebody. So please, guys, watch the Sunday preps, but when you watch them, use this as a way to learn the way my mind works, not just take ideas away that you're going to then go and try to execute yourself in the coming week. So I do remember somebody last week, we were asking for what is suggestions you would like to see, and one of the things someone said was maybe you could review a trade from the previous week so we can see, one, how it played out, and two, how you handled it. And I told the guy that that's a good idea. I will do that. And so I'm going to stick to my word here. And so last week, one of the ideas was a Microsoft idea, and it was a trade I took, and it worked. I'm not showing this trade because it worked. I am just showing it because it was the one that stuck out to me the most. And actually, I thought the thesis behind it was pretty solid. And, so we're going to use this as an opportunity to be, let's do a trade review, we'll call it, okay? So here is the Microsoft idea from last week for anybody that does not remember it. In Microsoft, I just know at some point the buyers are going to circle back around to this name. They're not going to let this come down too low before they start realizing that it's a big discount on this. The level I'm looking at is that 305 area. 305.60 is what I wrote down. It's got this monthly pivot as well as a retest of this breakout area. I don't know. I actually have this feeling that it doesn't even come down there. I feel like maybe last week's lows are a good spot to put risk on and cut it if it breaks them. I just want one more day of capitulation. Get me down to that 305 area. Let me put a trade on and manage my risk. If it fails, if it stays heavy, no problem cutting it, and I will look to re-enter right at that psychological 300 level. You have the annual pivot just below it. I would not hesitate to retry the trade at 300. Sorry, guys. So this is the chart from last week on Monday, heading into Monday, actually. And so you can see we gapped down a little bit, we flushed, and then it pushed back up, had a nice strong close. The idea, if you recall what I was saying, was one, it's an institutional name. There's no way something like Microsoft just sells off before at some point the big buyers step back in and you get a bounce, right? And, the idea was probably that this was going to go back and retest this 317 area. It did. I will show you guys how I managed the trade real quick. Let me pop this up. So here is my chart, okay? And you can see I did take the trade as we came down to the levels that were discussed in the video. But when it failed to continue higher and we came back, I had one ad, and I took some off for profit, but at that point, if we were going to continue making lower highs and lower lows, I wasn't going to stay in the trade. And that's one of the things I think I really want you guys to take away from this, is that even if an idea comes down to my levels, I don't just put trades on and then not manage risk. I always manage risk. And actually, if anything, it's by far the most important thing to me for how I trade. And so I locked in some, but I stopped out the majority of it and was, I think I might have been a little red on the trade at that point. But I specifically remember talking about it in True Trader when I was on live stream that morning, saying, this is the type of trade that even if it does set up, there's so much meat on this bone, we don't have to be first ones in. And I remember, a lot of times you'll hear me say things, and I say them because I want to actually remind myself, right? So that I don't end up forgetting something important about the idea or, losing my focus. And it was exactly that, right? So I did not chase this move this whole way up. Actually, you guys can't even see my cursor right now. I am trying to hover over the areas. Is there a way to get my cursor on OBS? There probably is. And I apologize, guys, that I don't have my cursor on there. But you can see that I waited for this thing to actually pull back to certain levels before re-entering. And even then, it still had this feeling of okay, if it's going to go, it's going to go. And if not, I still want to be managing risk. And so, you can see I actually scaled out some, then put it back on, then took the ad off. And then I finally had a last one down there at 306. And when it started working, after it started working, it never gave me another reason to take the trade off. Now, even though I really wanted to take this to 317 where I thought it was going, when something works out that fast and that smooth and it turns into a day trade like that, I was just like, dude, I'm going to take the profits here. Next day, I will look to buy an opening flush, opening weakness, because, there's no reason to think that it's not going to at some point roll back over and retest certain levels. And it did, and I think I missed it the next day, but It did go to I think it went to like 320, and then it came back down. So that was the trade idea on Microsoft, and I did want to just kind of review it. Hopefully that the executions, the main thing I want you to take away from the executions, guys, is that it's not just like I throw a trade on and then forget about it, right? Like I always manage risk no matter what. All right, so that was the trade review. We are going to do the disclaimer real quick, and then we'll get into the ideas. Guys, as always, I nor TrueTrader or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Trading is risky. Anything you hear me talk about today, it's not a solicitation to buy or sell any stocks. It is simply for entertainment purposes only. So let's get into, I don't know why that stayed there. Let me get rid of this Microsoft idea. Oh, did I hit the wrong? Let's see. Let's just use this. Okay, there we go. All right, guys. So here is your ES chart. As always, we start with the broader market. Again, last week, if you recall, we literally were saying so far flushes down to the weekly 20 hold, and as you can see, there's your weekly chart. You can see the weekly 20, literally almost to the penny, not quite, but definitely close enough to be like that level is important. It's obviously respecting that moving average, and that doesn't surprise me at all. Now, obviously, let's go out to the monthly real fast. The monthly chart, somebody in chat was talking about the fact that the monthly chart, we've never seen, whether you look at the ES or the SPY or whatever you want to look at, we don't ever see the chart speed up in the way it has. And that is what gets people so bearish on the macro or the longer term ideas. Remember, we point this out every single week. The further we get away from the 20 SMA on any period, whether it's the monthly, weekly, daily, 20-minute, whatever it is, the more the probabilities lean in favor that we will at some point roll back over and come back to test that level. The thing is that these higher time frames, such as the monthlies, you have to understand that each candle is a whole month. And what can happen in a month, this takes out a lot of the noise. What can happen in a month is a whole lot of stuff on a daily chart or a weekly chart. And when you start zooming into the more intermediate time frames, like a weekly or a daily, you can start to see that even though we look extended on this monthly, there's the ability for us to start to base and start to form some, like basically a nice sideways range, which in the long run, on the higher time frame like a monthly, is going to give that monthly 20 SMA time to catch up. So we don't always have to roll over and attack the 20 SMA. Yes, we can, and we always keep that in the back of our mind that we know that can happen, and we do know that we keep in the back of our mind we are extended. But we also understand that even if we roll over, this isn't necessarily something that plays out in a very fast manner. It's something that might have a lot of bounces in between on the weekly and the daily before it ever kind of gets down there to that monthly 20 SMA. And, I do want to point out one thing, and that is every single time that we really do roll over and test the 20 SMA on the monthly chart, we actually get through it. And then the monthly 50 gets tested quite a bit when we go into actual corrections where we, something that we can actually say was a bear market. Even though, the bear market of 2020 was lasted all of 2 months, right? And the 2018 one was pretty short as well. But not all bear markets are so short-lived. I'm not trying to make predictions. I just want to stay objective about the way we look at things. We have room back to the 20 SMA on the monthly. That's all there is to be said about that. If we go sideways for months and make a base, you know what? That whole big move up that people thought was overdone and, needed to correct, that sideways action for month after month after month can be price being digested to the point where it can set back up and we can kind of make a base to make a new leg higher. And that's always a possibility as well. So we'll go back into the weekly here. And by the way, thank you to a friend of mine in TrueTrader chat who taught me a way to make these templates so now I can show you other time frames without the pivots in there, because I know it was a pain in the butt to see a weekly chart or a monthly chart with all those pivots. So everything still looks intact as far as this time frame is concerned. We are still in an uptrend. Every dip is still being held at the weekly 20, and with the weekly 20 still sloping upwards, that means every time we make a dip, we put in a higher low, right? Let's go to our daily. Now, what am I looking for in terms of support and resistance for the week to come? Last week's lows, actually not last week's lows, Friday's lows. I'm actually looking for those to hold, because if you notice, they held this trend line really well. And it was also that quarterly pivot. So the first level I'm looking at support is going to be that 4,600 level. It is a round number. I do expect bulls to possibly show up there. And if they don't, the next level below that is going to be the weekly 20, which is last week's lows. And you also have that monthly pivot down there. Let's just call it 4,570. Okay. And then below that, we start getting into the 4,500 range, which again is another round number and another area where I definitely would expect to see the bulls make a stand. As far as resistance, it depends. I guess I forgot to say this in the beginning of this, but it always depends on where we open, right? If we gap up, a lot of the things I may discuss right now might come out of the picture. If we gap down, same thing, right? So depending on where we open, I can tell you right now, the daily 20 is the first level I really like for resistance. But if we gap up and we're kind of opening around there, I'm probably looking at last week's highs as the first level. So that 4740 area. And then, 4740, which is last week's highs, puts us right into this level up here as well. We're just going to group them together. It's an area. I don't ever look at a level, you'll see these pivots on my charts, right? 4606. I'm not looking for 4606 to hold on the penny. I'm looking for that area, okay? And then above that 4750 area is going to be all-time highs as far as resistance is concerned. Let's move over to the NQ. Now, the NQ does not look as safe yet as the SPY does, right? So the Qs, let's go back to last week, and we had discussed the fact that they actually broke these lows here when we came down, and they did not hold the weekly 20. And then right after that, you'll hear me say this a lot, guys, it's not about the pullback, it's about what happens after the pullback. And what happened after this pullback? Well, we pushed into the underside of the 20-day and then got stuffed. And so, as long as Friday, technically, we closed above this 15.5 area. But, if we struggle with that and can't get back above that, this really could start to come back down. I don't see why we wouldn't have a chance at testing the 200-day on this. And I really think that this 14,000 area is not out of the picture. And that doesn't make me bearish. I always want to reiterate that as well. I do not think that if we come down and test the 200-day, that's bearish. I don't think if we lose the 200-day and test 14,000, that's bearish. But keep in mind, that is putting us back down into that monthly 20. If I'm not mistaken, let me pull up the monthly chart here. Yeah, so that monthly 20 SMA is creeping up on this 14,000 level, right? So if we come down there and test that, a lot of people, you're going to hear a lot of people panicking, a lot of people, the sky is falling. You see them on social media. They're already out there, and we're not even close to rolling over to those kinds of levels yet. So just imagine the kind of fear you're going to see if those levels start being tested. Remember, guys, if you know a level is in play and we could get down there, set yourself up to not be in panic mode when or if that happens. If that means having to have some cash on the sidelines, then do that. Do what allows you to sleep well at night. Do not be fully leveraged up to the ears up here and knowing that 14K might be in play, right? Don't do that, because that's not going to put you in a position to make sound, objective decisions if that scenario arises. So as far as I'm looking for, let me get the pivots back on here. As far as levels of support and resistance on the daily chart, again, depending on where we open, the 20-day, the 50-day, you got that area from last week's highs where we pushed up. I'm just going to 16K, right? Nice round psychological level. 16K is the first level of resistance I see. Obviously, a little bit higher, you have the monthly pivot. You could literally just call all that an area. Then above that, we're going to have 16.5 and then 7, those all-time highs is getting pretty close to 17K. Support levels, depending on where we open. Last week's lows, pretty close to this annual pivot and the 200-day. I'm just going to throw it out there, 15,000 psychological round level. Lots of reasons why support should show up in that area. If it doesn't, next level is going to be down here. This is a range. Let's just call it this monthly pivot. We'll call it 14.5. And then below that's 14K. So that's support and resistance that I'll be looking at for this week ahead. Let's look at the cryptocurrency space real quick. We breached this level here, but we didn't breach. There technically were these lows back on September 21st. Those held, right? But so far, pops back into the underside of the 20-day are still being sold off. And if we can't reclaim certain levels and start to get some pushes, I still have not changed my views on what's going on with crypto at the moment, right? So again, I don't trade cryptos. I know a lot of people are so cultish on cryptos in general that they hear me say anything that sounds slightly bearish on that and they get upset. Listen, guys, I don't trade it. Don't listen to me. And remember, my ideas are my opinions, and you should be able to think on your own and not need to hear what I have to say, right? So I call it the way I see it. Objective is all can be. First level of resistance, if we were to get back above that 20-day, is going to be the annual pivot in the 50-day and the underside of the 200-day. And it also is this like consolidation area where you had a lot of volume traded up in there. So any pop into 47.8 to 4,800 or 48,000, I'll be looking for short opportunities on the equities that follow. So Mara, Riot, Coin. I mean, there's a lot of them. Familiarize yourself with the names, the individual names in the crypto space. But that would be the game plan there. And then if we roll over and start losing levels, I'm not really looking to get long on any of the crypto names unless we get like big capitulation. We come down to 30,000, I'll probably be looking at some of those names. I do quickly let's look at the Russell real quick. I want to point out that we have still just stayed in this range, right? So unless we kind of like roll over and go under this 2100 level, this is just range bound. And remember, the longer something goes sideways, the more sustainable and bigger the move when we finally break out or break down should be. And it's not really, I'm not here to play guessing games on whether we break above or below, and just know what to look for. That's all, okay? So let's get into the sector analysis. And as always, we are over to our barchart.com. Check out the stock market sector section. And I always like this fancy little short-term matrix, guys. Now, we'll obviously there was a lot of red in the market last week. Energy was the standout, right? It's obviously the only standout. And communication, even though it was green, when we get over into the sector ETFs, like we'll just do it now. I'll show you guys. I still don't think communications are ready, the communications sector. So here, well, almost clicked it. Sector ETFs. We'll go right through the list, okay? Retail, I made a note, still looks bearish. Every time we pop into the underside of the 20, and it shows. If you look at all the equities in that sector, most of them are having a lot of trouble, okay? Until that changes, any pop back up into these levels can be looked at as go and find the Kohl's, the Nordstroms, the Dick's, the frickin' Macy's, and all these other names that are in that space, and see if they're also setting up for a short, and you may have a trade there. Financials still look good. We had a gap down on Friday, but it pushed back up a bit. But as far like night and day, right? There's your retail sector. Here's your financials, right? So, what other notes did I make? Because I don't want to go through all of them. I do want to point out that the XLC is communications, and remember, XLC was green on the week, right? Green on the week doesn't mean bullish. Okay, we always look at this and we cross-reference it with the ETF so that we understand a broader view of what's actually happening. And this reminds me a lot of the retail sector as far as the ETF chart is concerned. We have rolled over, we lost this level until we get back above 79.50. Let's just say until we reclaim the 200-day on this, right? I don't see this being bullish. If that changes, then I'm ready to change my opinion and start looking at some names in this sector. But, if we pop into the 50-day, which right now is at 77.87, if we spike up into the 50-day, and you get a bunch of other names in the communication sector that do the same, have a spike on a downtrending chart, that's going to be a high probability short setup, just because where everything's at and how much supply it has to chew through before the bulls actually take back control. So even though it was green on bar chart, right, like the sector was green on the week, doesn't mean that I think it's got longs, right? And the other one I wanted to point out was actually two. I'll save energy for last. Was the biotechs. We talked about this last week, and I was saying I really think this is getting ready for a bigger pivot point in its chart. I think we have come so far down. I feel like we are in levels now where this may be ready to have a bigger picture reversal. And we can look at the weekly, and you'll see, yes, we pierced this line I drew, right? Again, lines are just guidelines for me. They're not written in stone. What I do like is that the weekly candle is showing a bit of a reversal. So what do I do? Well, I watch and see what kind of weekly candle we get next week. If we can get another weekly candle that has kind of like a bullish look to it, whether that be a bullish engulfing candle or another hammer or whatever it is, as long as we don't just roll back over and then throw in another bearish candle, I may start getting interested in some of the biotech names, because they are really, really beaten down. We've really lost levels, but at a certain point, these things will have bigger reversals, okay? And here's the thing, you'll hear me say this, I'm gonna beat a dead horse. I don't have a crystal ball, nor do I want one. I don't give a F about them. All I care about is knowing if this, then that, okay? So if this puts in another bullish weekly candle, then I may start looking for long setups in this sector. If this rolls over and puts in an ugly weekly candle, then I know to keep my hands off and possibly watch for this to come retest this lower channel. It's as simple as that, guys. All right, and then XLE. What a chart. This is now breaking out of this really, what is it, a 7.5 year downtrend, okay? And it is now starting to look a lot like the oil ETF, the XOP. So XOP had the same type of thing. And what we look for is in these higher time frames is for once they break out, for them to retest levels, key levels, and hold, and then start to push again, because this could be a new regime change, paradigm shift in these sectors. Both of them were coming off lows in 2020, and even retesting them, not quite the lows, but retesting them at the beginning of 2021. And it may be time for things to change in those sectors. Now, I am a consumer as well, so it's not like I like to see energy and oil going through the roof, but make some money off it, guys. Make some money, okay? So that's it for the sector analysis. It's time to jump into the actual ideas, and I'm just going to go back to the main watch. Oh, I can get rid of this. And what is the first idea that Ricky has? It is going to be QCOM. Let's do QCOM. What I wrote down on QCOM is 181, and you can't really tell why when you look at this chart. So where did Ricky get that level from? Right here, guys. If you see this candle here, we keep testing this 181 area, and it's going to put us back down into, the 50 day is going to keep creeping up. So I don't know if this happens on Tuesday morning. I don't know if it happens on Wednesday or Thursday. If it rolls over and comes flushing down to 181, I would like to get long with some managed risk. Remember that, guys. It's always about managing the risk. This was an idea from last week, and the level I wanted was 174.50, and the lows were like just under 174, right? 174, 173.78 or something. So, then it went, 15 points almost or something. QCOM is a strong stock. It's behaving very well, even when the market is getting hammed. So, that's another key takeaway, guys. If the market looks scary and you still want to have long trades, stick to the names that are performing, okay? That's going to get you pretty damn far if you can just do that. Let's see. So 181, I do want to point out, if QCOM breaks out above this, let's just call it 193, you can look to buy dips with, just risking the previous low, higher low. That very well may happen as well. The one thing I will point out is we are into earnings season, and so a lot of times when you have earnings approaching, now not always, a lot of times you will see run-ups into earnings, but that's there more often than not when you have a big move up. See, this move here came from last earnings, right? So beat on earnings, market liked it, it pushed up, and we've just been flagging ever since. A lot of times you'll just see it flag until those earnings. So, and then the earnings will be the catalyst to get the gap up, to get the next leg. So it wouldn't surprise me if this actually goes sideways for another, I think, let's see, the earnings are in February 2nd. So for another 2 weeks, we can go sideways, and then the earnings can be the catalyst for that move higher or lower. We don't know if they're going to beat or miss. But what that gives me is confidence that I don't need to be chasing this. If we know that this has a good chance of flagging out and staying sideways until that earnings report comes out, I may get that 181. Maybe the 181 doesn't work. Maybe it comes lower and gives me another trade. Who knows? But the thing is there are going to be trades here. Okay, the name has range, 6 point ATR. It trades 10 million shares a day. We're good to go. I do like QCOM. So next idea, Tesla, whatever you want to call it, guys. It's not there yet, and the way I'm playing this, you see this alert I set basically over 11:14. Let's just call it 11:15. If it clears 11:15, I'm buying dips because we had this flag kind of develop here. Remember, we even talked about this a few weeks ago that even though it broke the bottom side of that flag, these are just areas. They're not. I'm not looking for this to test that line, some random line I drew on a chart. I don't want to see it tested to the penny and bounce. I don't care. It's just a guideline. But once it did that, we broke out above, and now we've pulled back to the 20-day. And what I love to see this, right? Pull back to the 20-day, push up an intermediate high right here, and then we get a higher low. If we then go and break above these highs, we should see these highs here, and then possibly these highs as well. And then if the trend's going to continue, it can trend. There's going to be a trade here if we get above 11:15. Okay. Now, granted. You can probably also buy flushes on this into that 1,000 psychological level, whatever. Remember this. I'm only giving you a few ideas. There could be 1,000 different theses to come up with on Tesla, how you would play Tesla. I encourage you to come up with your own idea on Tesla and then trade it and see how much better you do trading your own idea than trading mine. But know that I'm looking for this and understand why. Don't just take my idea and trade it, but understand what is it that I see. I see a pullback after we break above this flag here. I see a pullback that hits the 20-day. We push up, we make a higher low, and then if we break that, we should go. That's it. Pretty simple. Next idea, guys. DISCA, Discovery, Series A's. This is something that possibly could be a swing trade almost. I'm not going to put it in the swing list this week, but what I will point out is it's had a lot of interest lately. There's the Time Warner, I don't know if it's a merger or an acquisition, I forget. It actually says it over here somewhere. Let's see. Merger. So there's that, which is obviously a catalyst, and there's headline risk because of it. But the volume has picked up, and we've really broken some levels. This day here, the big day where it pushed, I think a lot of people just thought it was an auto short, and we pulled back and made a higher low, and we're pushing again. So the idea I have on this is 28.94, and it should be very obvious why I like that level. You got your monthly pivot, you got your 200-day, and you got your week. I think it's the weekly 20. Let me just verify. No, it's the monthly 20. Sorry. 29.30 is the monthly 20. So anywhere in that 29 area, okay? That's what I'm looking for on DISCA. Looking for a flush to get long on that name. And it may never even get down there, especially considering it closed so strong on Friday. So this may be one of those ones that just goes. That's fine. I don't ever care about missing a trade, guys. Next idea is MMM or And I am looking at this Friday's low a day. I mean, could you ask for a more important area to hold to the T? It's the is it the monthly 20? It's the monthly 20 the 20-day, the 50-day, and the quarterly pivot. They're all so tight in there, and then on top of that, they defended it on Friday. So I'm looking for a retest of Friday's lows to get long on MMM. And the last name on the strong stocks looking for continuation list is WDC. Another chart that's just been strong. STX was strong as well, which is a peer, same sector, same type of company. I'm looking for a flush down to the 20-day, the 200-day, and the annual pivot. 64 is the spot where I'm looking to get long on Western Digital. Next section is oversold reversion setups. And basically all this is something that I know is a good company or has some reason to get my interest, that it's just sold off so hard, and that I feel like it's going to be due for a bounce. So I'm looking to bounce these plays. The first one is Starbucks. And you'll recall I had this on the prep a few times, okay? And here's what it did. It pulled a GE, guys. It literally triggered this level, this breakout level, and then slammed down. GE did the same thing. You see it up here, we broke this level and then slammed down. But these things come down and then they have bounces, okay? So with Starbucks, I am looking to play this against Friday's lows. There's just a lot of stuff down there. It's right under the psychological 100. I know it got through it. I don't care. I think you can risk Friday's lows or maybe even a little bit below it. If you guys are wondering what some of these lines are on my charts, like this purple line here, that's a VWAP Boulevard. If you're not familiar with all-day faders, friend of mine, great dude on Twitter, full of really good knowledge, and nobody with a better sense of humor. Follow him. It's something he kind of developed. It's like on days that have extremely high volume, the VWAP from that day tends to be a significant level. And they use it, him and a lot of his followers use it to trade small caps. I have them on my large caps too, because I've noticed that there oftentimes is significance. So I do keep them on the chart just in case you guys are wondering what these levels are. And that's another thing that Scripts to Trade, which we were talking about earlier, developed a script for. And because it was something developed, or an idea that was developed by All Day Faders, who's always been so good about just giving back to the community for free, Scripts to Trade made the script free. So you don't even have to buy it. That's friggin' amazing. So if you guys want it and you have TradingView or Thinkorswim, go get it. All right, so the idea is this has capitulated, and I'm looking for it to hold Friday's lows. 99 is the level I'm looking to be long. If it loses it and starts rolling over, the next spot down is going to be this 96 area where you have the lows from February last year. The next one on this list is Skin, and not really familiar with the company, but it trades liquid enough, and the range $1.55 ATR on a $15 stock has me interested. And the sell-off's been pretty good. I don't know if it's going to get to the level I like. I'm looking for 13 to 12.50, somewhere in there. Down here at this annual pivot, you can see this level here from where it broke out. Yeah, anywhere in this area, and it capitulates down, I'm looking for higher lows and somewhere to step in and get some risk on, because at some point I feel like this sell-off's going to have a really decent bounce. Next name on this one, and this is the last one for this section, is Square. And this is another one I don't know if it's going to get down to where I like it. The reason I'm being so conservative on this name is because it reminds me a lot of some of these other big tech names that have just gotten hammered, and when people think they can't go any lower, they keep going lower. And you have to think what happens is, look, I bet a lot of people bought it here at 190. It can't go any lower, guys. It can't go any lower. Flushes out, right? Pops back up here and stuffs, and then goes lower. Probably people bought here, pushed up, rolled over. So every level we go lower, you get more and more people coming in going, this thing can't go any lower. And they keep going lower. So I don't want to step in front of this until we get really extended. The level I'm looking at for Square is 116. It's pretty damn far away. It's this annual pivot down here. And the reason is it actually does line up with this level from back here in 2020. I'll just throw this over here. Yeah, so a flush down to here. And listen, there's no reason that this level should be any more significant than this one was, or this one was, or this one was, and none of them worked, right? But the name has a $9 ATR. It trades liquid. There are trades. It will give you opportunity to make multiple points on intraday bounces when you catch those overextended emotional flushes, and that's what we're looking for. I see questions in the chat, guys. I'm gonna circle back around to them as soon as we get through the ideas, so don't think I'm ignoring you, okay? So now we're looking at shorts. Those were all longs, okay? Now I'm looking at shorts. Weak stocks looking for continuation. I'm throwing AMC in there this week because they upset me over the weekend with their whole cult. Listen, guys, there's a whole cult behind this, and if you guys don't know the story behind AMC, you must be living under a rock. There's a lot of people out there that keep saying that this has now come back down to fair market value. Here's the thing, and I tried to explain this to some people over the weekend. When you get something so retail crowded, there's other names I can pull up and show you, and I will actually. There's a point where even if it is, and I'm not going to try to explain what I think fair market value is on AMC, because when you talk to a cult, you're talking to a wall. There is a point where it may actually be fair market value, but because it's so retail heavy, it can go a lot lower. When you get people that just, they're price sensitive and they just hit max pain and they capitulate, if fair market value is $20 and people are hurting right now and they still have to just bail out because, sorry, I couldn't take the pain anymore, there's no reason this doesn't see 15. And to be honest with you, in my opinion, there's no reason this doesn't see 10. We'll see. The thing is we could be cults. We could be in a cult. We could drink a bunch of Kool-Aid and buy into a story and ignore what price is telling us, or we can have an idea and see whether price proves us right or wrong. I'd rather just be here to make money and rather have price confirm what I think than to fight something. So I still think that this is a great short on all pops. Anywhere into the mid 22s to 23 is what I'm looking to short. If we're gifted with a pop back to the 20-day, I'm definitely looking to short AMC on a pop up there. I don't think it gets up there, but it is what it is. We'll see. And I love all these spammers in the chat too. You guys don't have anything better to do with your life? Posting links to cryptocurrency stuff. All right, the next idea in here is Blink. Now Blink, I'm going to give a caveat with this. Actually, let me show you charts of names that people thought were at fair market value. Look at Fubo. Remember when there was a cult behind Fubo, and it comes down and people go, where's the bottom? There might not be one because it got so retail heavy. Pretty much any of the names that ran big last year are all names that got very retail heavy. Why? Why did things get retail heavy in 2020? Because everybody was at home with a government check and looking for ways to supplement their income that they may have been laid off from work or whatever because of COVID. No wonder everything got retail heavy. And I'm not trying to cause friction here. I'm just trying to be objective and point out that when things get retail heavy, people constantly go, where is the bottom on this stock? There sometimes isn't when things get like that. And that's the idea on something like AMC, guys. So moving on, the next one was Blink, another one that got retail heavy, very, very retail saturated. And the reason it's on my list this week is because we broke these really important lows 2 weeks ago, and it's still struggling. You can see the pop up. We didn't even get to 26, right? And it started to roll back over. I'm really, really hoping we test that 26 level. That's what I want. But the caveat is I need, most likely in order to trade this name, I need a catalyst on that day because I do need the volume. It's not been liquid like it used to be. Like, look at these days where it was trading 10, 15, 20 million. And even back here, we had a lot of volume back there. Now it's trading like 1 million, 1.5 million, 2 million shares a day if we're lucky. 2 million shares is okay if we're talking about like a $90 to $100 stock. When you're talking about $20 stock, the dollar volume coming into this on a regular basis isn't enough for me. So I would like to see 26, and I would like to see it happen. I think it needs a catalyst to get to 26. So hopefully we get that. Hopefully we get a catalyst, and it gets volume on that day, so we have liquidity, and I want to short a pop to 26. Next idea is DKNG. No different than any of the other charts we were just looking at. 26 to 26.50 is what I'm looking at. Yes, the 20 days at 27, but I'm kind of looking at more of, whoops, I don't know why I have this line here. Hold on. Yeah, I'm kind of looking at, you can see the weekly pivot from last week. I forget, I had calculated next week's pivot as well for the weekly. It's somewhere in this 26 to 26.50 area. That's what I'm looking for short on DKNG. And remember, these things, until they change their current behavior, which let's define what's happening right now. It's in a downtrend, and this is not debatable. This is completely objective. This chart is in a downtrend. Every pop back into the 20-day makes a lower high and then makes lower lows. It's trending down. If that changes, remember, this is how we make these if-then statements. If we reclaim the 20-day and then start making higher lows and higher highs, I'll probably stop having these kinds of names on my list for shorts. But until that changes, why would I not be looking for this to continue? That's the idea here. I really think that, until those dynamics change, this can just keep doing this, and it's just an ATM. It's a perpetual ATM on a lot of these names. 26 to 26.50 short DKNG. The last name on this list is eBay. eBaby. And I am looking for, what did I write down? 65 to 66. So you have your monthly and annual pivot at 66, but I don't want to ignore 65 with the 20-day right there, and it already rejected it on Thursday, right? So if we spike up into 65 and I see sellers step in right there, I'll throw my trade on, have my risk, and I don't mind. Hopefully you guys understand from that Microsoft chart I showed earlier, right? I don't mind stopping out and re-entering. Not a problem here, okay? So that's the idea for eBay. The last section is overbought reversion setups. So these are names that I feel like are getting ahead of themselves. Philip Morris is the first one, and even though, the one thing I'll say about this is it's not having a lot of days where it gaps up. I would like to get that gap up day where you get kind of like just that FOMO euphoria and squeeze out all the shorts that probably got short this, at 100. There's no way you're going to convince me there's not shorts in this right now, just based on the chart. I want to see them all get blown out. Whether that happens up in, like, the first level I'm obviously looking for is the 52-week highs at 106.40. But if, maybe there's people that short there and it doesn't work and they get stubborn, and maybe the blowout is actually higher into this like 108 area, that's fine. But I want to see this blowout. That's what I want to see, and I think there's a big reversion trade in this Philip Morris name. The last name on the list this week is PSX. Same thing, guys. And what I'm looking for on this, even though there's no pivot up here, is 94s, and it's because it's the 52-week highs. It may reject at 92. It may reject 90. I don't know. No crystal ball. Don't give a crap about one. Bring me 94s, and I'll be watching for a trade. Same idea. Just think it's getting ahead of itself. Remember, it's in a strong sector, so we got to acknowledge that. But if you remember, the energy sector, and yes, this is oil, but oil and energy a lot of the times trade very closely correlated. Energy's getting ahead of itself too, and even though we pointed out that it had this big breakout, remember what I said about what oil had to do when it finally had that big breakout. Remember, it has to retest these levels. So just because something has this big breakout doesn't mean it's just all in long. No, we need to buy dips, and right now where XLE is, it hasn't had that dip yet. So breakout's fine. Push, the higher the better, fine. Give me the dip, because the dip's going to give us the reversion in the PSX idea, okay? This is another thing I like too, is that when you look at this chart, you can see that 94 area is going to be, if we just slam up there, this weekly chart showing that it's, you don't get too many moves like this where there's no red candles in between. So another big green candle right in the 94, and I think we get a good trade here. So that's it for the ideas. I want to kind of touch on the swing ideas we talked about last week, because I I don't want to keep throwing swing ideas out there, but I want to update if there's any updates on them. And if a new swing idea does come around that's valid and worth putting on radar, then I'll put them in there as they come. But I'm not just going to look for swing trades like I need to find one for this Sunday prep. It doesn't work that way. When they appear, they appear, and that's it. So let's look at, let's see, LUMN has had a pullback. We're getting close down to levels where I would be interested in buying it, anywhere into this 1170 area. Again, it's more about where do we have defined risk as well as a beneficial risk reward, right? Obviously, it rejected this trend line again. But if we're going to eventually break out of that and get a move higher, then the buy area is the bottom of this trend down here. Especially, if you wait until after we trigger up here and push, you're looking to buy dips back into it, which puts you in around 1380. You have really defined risk down here. You can see the lows. You could even like throw a trend line in down here if you want to try to play against that. I wouldn't necessarily. My idea would probably be to buy it against down here against this 1160 to 1170 and have real tight risk. Duke still looks good. Nothing's changed there. Still think we need to clear this 105.50-ish area to get going. Again, could be bought. It could be bought on dips back into the 200-day, 50-day, 20-day, or not 20-day, weekly 20 area. If you want to try to front run it, or not front run it, but just anticipate, right? It's in a good sector, so utilities have been performing pretty well. It's also in energy. MGM, this one is valid, and last week gave that dip to the 200-day. So was this last week or was this? I think this was last week. Yeah, wasn't that Monday? Monday, Tuesday, Wednesday. Yeah, that was Monday. Monday gave the dip down to the 200-day, and it bounced. I mean, you could have scooped it there, and you can see I've drawn out the risk reward for you. You're getting 2-to-1 on it, and it's already confirmed that it wants to try to go higher. So at this point, it's about putting the trade on where you have defined risk. Another one. This one, I didn't expect the gap up. It kind of sucked because it's going to be impossible now to get long this name where we're anywhere near down where we were hoping to be long from. The idea can change, but really, like, I need a retest of at least 39.60 to be trying to buy this. But yeah, the gap up really kind of took it away. BEKE, technically we did break above this level up here last week, and then we came back in. So if you want to look at this as though it's good to go and triggered, I'd be trying to get long as close as I can to these lows and have a nice tight stop on the name. STNE, remember we talked about this one not being ready yet, but I think it's going to be ready now if we break above last week's highs. I'm putting an alert there, and that's what's going to get me long on STNE is if we get above that. Why do I say that? Because pull back, push up, intermediate high, higher low, we break that, we can go. Trying to keep it short and sweet. EMR, I'm eyeing this for a long, but there's some things that need to happen here before it goes on the swing list. So let's get into the questions because I feel like I'm getting a bit long-winded here anyway. Let me see if I can find these. Okay. Eric says, hey Ricky, do you believe there's value for individual traders to eventually leave all chat rooms and focus solely on their own process and convictions? 100%. Dude, I'm over at True Trader, and our whole mission statement is we want you guys to not need us. That's the whole point, guys. And the sooner you can get there and get outside of an echo chamber and only be you and your ideas and your thoughts and you execute, 100%. I do think there is a reason for you guys to have that as your goal. Now, listen, trading is a very, very lonely business. So that doesn't mean that you might not want to be part of a community just for other reasons, right? But you shouldn't just be part of a community just so you can piggyback ideas. That's definitely the wrong way to do it, and I know a lot of people do that. Irfan says, PXD super extended, Ricky, might be worth a look. It's going to be that same sector. PXD is same as PSX, exactly, yeah. And it's, it's not that it's not on my watch. I definitely have it on my watch, right? But the reason I like the PSX one a little bit better is because it's going to be coming up into some black and white objective levels of resistance. But 100% agree with you on that. Ricky, what are your thoughts on TSM? I actually traded it last week. It was getting extended. That Friday candle. It's hard to say. The top might be in. It's maybe coming back down. It felt like it traded a little weird when I was in it the other week. Before I forget, tech was another one I don't want to forget about. It's hard to say the reason TSM reminded me of this is because it's hard to say. You get like this, you get a candle on Thursday that makes it look like the top might be in, and then it's followed up by a candle like you get on Friday where now it kind of has you question yourself. And the last thing you want to have happen is this thing go sideways for a bunch of time, because it's just like we talk about with the broader market, if things just go sideways, they may be gearing up for another leg higher. Now, at least your risk is defined, right? Over highs, and we got to get out. But TSM kind of reminds me of TECK, where I'm like, I thought there was a trade there, and we'll see. There may still be. Kendall, Ricky, you seem to always wait for a pullback. Do you never join a breakout? No, I do not buy breakouts ever. It doesn't mean you can't. There's a lot of people that do. And here's what I will tell you. Buying a breakout works amazing in certain market types. I don't think we're in that market right now. The only way for you to understand that and have conviction is to do the back testing. And that's how you can do that. It's 100% possible for you to kind of look and see what are some of the things that are correlated to a market that is beneficial to buy breakouts versus a market that's not. But when you put in that work to do that back testing and figure out what it is that makes that market conducive to that, you're going to have the conviction to know and execute. And that is the difference. Irfan says Friday low is less than ATR on S-Bucks. Yes. So, well, listen, when we talk about the ATR, and plus, let's see, it's a 256 ATR, and it traded, it really has just been straight down. And keep in mind, ATR is just the range on the day. So if we open at 100 and flush down to 99, but then push up to 101.50 or whatever, you're still getting that ATR. I don't avoid entering a trade just because it hasn't traded its ATR. That's not something I do. Now, it is something I use to look for possible levels where I'd be interested. 100%. What would make me look further down on Starbucks would be if it closed at low a day. But let's look at the intraday chart on it. And you can see we came down, bounced, and we're pushing back up. And we can even look at it from this point of view, which you can see the trigger here. If you're not part of the TT community, you might not understand the setup I'm pointing out here, but I do talk about this a lot, guys. A pull that, or a flush, you get a low, we push up, make a higher low, and so the break of this high up here, which is 100.58, that would be your trigger. So there's two ways to really play it, right? I want to buy a flush against 99 so I can get in with a better entry. But we break this level, and it's probably going to be look to buy dips after that. So I'll put an alert there just in case, because we have room back up to the 120-minute 20, which you can see we've been riding down, right? Push up to the 120-minute 20, roll over. Push up into it, roll over. Push up into it, roll over. Push up into it, roll over. But now we're extended below it. So now I'm looking for something to show me that we're reversing at least back up to it, and that's going to be the first target. Now, granted, come Tuesday morning when we open, we may be trading pretty close to that level. So I really do want to try to buy it as close to Friday's lows as possible. But hopefully that answered that question, because I know exactly where you're coming from when you point that out. Just being worried that and I'm not suggesting you buy it as it's flushing to that level. If you don't know how to manage your risk when you're trying to buy an emotional flush, there's other ways to enter where you can have defined risk. Alex says, what is your thoughts on Lucid play this week on 19th or 20th January? Lucid founder shares have been locked and will come unlocked Last time it happened, they dropped rapidly with all sells and then jumped back up very, very quickly. So here's the thing. A lot of people have kind of like picked up on insider lockup expirations, and they don't really, in fact, they oftentimes play out the opposite of what people think is going to happen. My thing to look for is, what does the tape tell you? What does the price tell you? Is it heavy? Because when there is a, millions and millions of shares that are being sold, you should be able to see that. You should see every pop get sold off heavy. You should see this, the tape should just feel heavy, like bounces are being sold. If it's not, then you may actually look for the long, because you may know that a lot of people are shorting it thinking that insiders are just dumping. But if the tape says they're not, you may have a bunch of shorts that are offside. So that's what I look for on insider lockups. You've got to have confirmation from price. Is skin a falling knife? At the moment it is, yes. 100%. And that's the idea on these trades, is that I'm looking for an overextension, something that's, no different than what I look for on a 1 minute chart when I'm looking for something to be parabolic or flushing emotionally. Look how far we are from the 20-day. And look at historically on this chart, what's the farthest it ever gets away from the 20-day, right? So, you have this low here, and at this point, it's $21, and the 20-day was around 27, right? It's $21 now, and it's trading at 15. So it's more about, is this going to eventually have a bounce? Or, imagine trying to short this. I would be scared shitless to get short this down here, because we are just so extended to the downside. I wouldn't feel safe. It just becomes about, eventually the path of least resistance is gonna be higher. It doesn't mean it's a bullish long-term anything. It's literally, we're looking for an intraday trade on it. Dummy Cosplay says, do you think GME and Beyond Meat is retail heavy too? 100%. Beyond Meat, probably not quite as much as GME, but yes. Grandizer, can you please look at pins and PLTR? Both of them, I can tell you without having a look, are both things that I'm looking to short all pops on. It's just exactly like what I said about DKNG, right? Every pop into the 20-day gets sold off and makes new lows. Same with pins. Look at every pop into the 20-day. Pop into the 20-day sell off. Pop into the 20-day sell off. So now you see I have an alert set right here, right? Over 35. That is, if we get over 35, then you may have a long in there, because if you notice, that would mean that we popped into the 20-day and we didn't make new lows. Instead, we made a higher low and then pushed. So there is a looming long trigger on Pinterest, but until it proves itself and confirms, I have no skin in that game at all. And PLTR, not much different. Again, all pops into the 20-day keep getting sold off. That's a Kathy Woods name, if I'm not mistaken. I don't know if she's still in or not, but is what it is. Grandizer, are you by any chance KH? Did you just change your name on YouTube? Joey says, Ricky, are the savings on borrows worth paying commissions to switch to Cobra? Yes, 100%. In fact, most brokers that don't charge commissions don't have the locates, period, right? Like, good luck getting locates at Schwab or Thinkorswim or actually, I don't know if E-Trade's still I'm not sure if E-Trade's still, well, one, is E-Trade a commission-free broker? I think they might be, but I don't know if not sure if they allow you to pay. Man, you know what's funny is I have an E-Trade account. I just never open it up and trade it. So I don't really want to talk on E-Trade because I don't really know. But it's 100% worth it to get. Dude, the locates are hella cheap, hella cheap at Cobra, and plentiful too. Let's see here. Oh, okay, yeah, and they run out fast too. Somebody's saying in the chat. SoFi. Jerome is saying SoFi. My guess is you want my opinion on SoFi. Guys, if you guys want to ask questions about a stock, maybe be a little more specific, okay? SoFi is, again, very similar to what else we've been looking at. I like SoFi long term, but that's different. And I do actually own SoFi from about 14, and I don't look at it on. I never pull up SoFi to go, oh shit, what's it trading at? Never. But from a day trade point of view, this thing is still, again, heavy, and it's making new lows. So I don't see any reason to be looking along it unless it capitulates and comes down to like this 11 area. Okay. Irfan, Ricky, if a stock has strong momentum but extended, do you look for a short into a level or a long on a small pullback? If it's extended, it's really tough to get me in there long. That's straight up the only, and there is no right or wrong. Other people may tell you, dude, the momentum saying it's a long, so I'm looking for pullbacks. At that point, it feels to me as though like it's FOMO because you wish you had been long from lower. And you're just like, oh, let me in. But to each their own, right? But I don't. I look to short on extensions. And then when we roll back over to when we revert to a mean that's substantial, then I may look to long it. That's the way I do those. Yogi says, look at LPX on a pullback to 72. Ideally for a swing and AEHR as well. See, Yogi knows how to ask a question. LPX. Yogi, you always ask me about stocks with no volume. I love you, man, but again, like I can't do it. The level looks beautiful. I see the quarterly and the 50-day as well as the low. Is that last week's lows? So I mean, it's a great level. It really, really is. I just can't get involved in a stock that is trading at about 1 million shares a day. AEHR, now AEHR was trading volume. It's died down now too. AEHR looks like the party's over when I look at that chart. The fact that it broke that 14 level and then you get that ugly candle on Friday, honestly, that kind of to me looks like that party's over. Maybe short pops back to 17 or 18, but again, the volume there is not going to be substantial enough for me. Eric says, have you seen relative strength in the semiconductor sector? Yes. I mean, especially when the market looked like crap. Here's your SOX chart. This looks great. It's just a big flag up there, which is, why we like a lot of these names, like MU, AMAT. A lot of these names look really, really good. So yes, there is a lot of relative strength there, but keep in mind that can change, right? We could have a strong semiconductor sector, and then that can roll over and get heavy. And the thing is if that's where all the money's going now and it comes out of there, the trick's going to be to find where that money goes next, guys. Mr. Dimitrescu, I'm sorry, buddy. What about stocks that are above the 50 EMA on the daily but under the 50 EMA on the weekly? Well, I don't use EMAs, but I just that concept in general. Think about what it's saying, right? If something's above, let's just say the 20, right? Let's say it's above the 20 daily, but below the weekly 20. That means the stock has come way down, and it had to come down enough to get underneath the weekly 20, and now it's starting to kind of find a base and get strong again, reclaim the 20-day. So, things can have nice turnarounds from those kinds of levels, but when they do, it can be slower development of the trade, and you don't have to be first in. Like, I bet you anything STNE fits that bill, right? So I don't have a 50 EMA, right? But this is a SMA. The red is the 50 SMA, okay? So if we get above, let's just say 20. If we get over 20, we're going to be above the daily 50. But the weekly 50 is way up here at 50. Right? So this would fit that bill. Now, what I would point out is look at this weekly chart, and this is what I like about this, is we've got this sideways base going, and the first target's going to be the weekly 20 for me. Because, I mean, why wouldn't it be? Every time it pops into the weekly 20, we sell off and go lower. So if we're about to make a base here and push, this is why STNE is on my swing list, because I feel like we get back above 20 and we're going to the weekly 20. So hopefully that answers that question as well. I'm probably going to wrap it up there. Let me check real quick, see if there was any last questions. Big big shout out to High Trader for helping me he gives me a thread of the questions that I need to kind of touch on. So guys, show that guy some love in the chat. He does a lot of behind the scenes work at True Trader and with these things, as well as Goose's midweek watch. So big thanks to you, High Trader. I don't see any other questions. I am getting ready to watch the Chiefs tear up Seattle, or the Steelers, and so I'm pretty excited. Grandizer's asking about Space, Baba, and Neo. Grandizer, there's no way you're convincing me you're not KH. Those are all the same tickers he comes in every week and asks about. Those stocks, my opinion doesn't change on those stocks. In fact, if you're not KH by any chance, go back to my previous Sunday preps, and I did address every single one of those stocks, and my opinion is 100% the exact same on them. Nothing about them has changed to where I all of a sudden feel bullish about them. So it is what it is. I don't want to ever be. I started this whole prep out telling you guys, don't go on social media and look for confirmation bias. You got to see things. You got to come up with your own game plans. You got to see things through your own lens. You got to learn how to think for yourself. Nothing I can tell you is going to give you any sort of conviction to really make money. You want to make money, learn how to create a game plan, learn how to think on your own. Stop looking to social media to confirm whatever it is that you feel you had an idea about. Remember, there's always going to be somebody that will agree with your idea. And if you're looking for confirmation of an idea on social media, it's most likely because that idea is not working out for you. So I love you all. Stay safe. I'll see you Tuesday morning for the market. Remember, guys, you can sleep in tomorrow, or you can wake up early and go get a lot of stuff done. So go Chiefs. See you guys Tuesday morning. Peace.